Welcome to Total Money Management. Going through the week that was, ending September 12. How we doing, Steve? It feels weird not saying gents.
Yeah, I'm just having a sip of the wine. Yes, folks, Jacob's not here, but he is now an Australian.
He's here in spirit.
He's here in spirit.
He's finally a certified Australian.
Classified, yep.
How long? 10 years.
He's been here 10 years.
Yeah.
Has he really?
Yep.
Oh, that's a long time.
Yep. I still remember interviewing him 10 years ago.
Really?
When we worked together, yeah.
Wow. Hallelujah, brother. Yep. Anyway, Jacob, we raise our glass to you. Cheers, mate.
Well
Another
done.
Australian to the population.
Don't worry, mate. There's still 29 bottles of this stuff left.
Yep. Now go buy a property, okay? Yeah. Be a real Australian.
All right. So what are we covering? Far out. Lots happened this week. Just quietly.
Yes. Yes.
It's been an emotional roller coaster. Reading the news, but also watching ComSec.
Yeah.
In my portfolio.
Yeah. It's been a bit of a wild week in a lot of ways. Actually, it seems to be getting. But the top headline I got there is what me worry on the topics this week, and it just seems to be everything just seems to be a little bit kind of spiraling out of control. Like it's just everything's getting crazy.
Yeah.
Like it's just everything's just going. I won't say going to the shit, but it just seems to have become untethered. It's
everything.
Yeah, that's what I mean. Like. There's people fighting and arguing, and there's people like betting, and there's people who, heaps of people going, the market's going gangbusters, and, but there's wars all over the place, and it's just hard to keep up with sometimes.
Yeah.
But alas, that is our job, Thomas.
100%. Distinguish the signals from the noise, right?
Yep, absolutely.
We're going to be covering hidden risk and silent evidence, so memories of 2000 to 2007. And then Trump tariffs head to the SCOTUS?
Yeah, Supreme Court of the United States. Yeah. But just before we get that up the top there, this is I always try to make these sort of a little bit thematic. Like I'm going to focus on one little thing in the week and make that the lesson or the point that people take home, because you don't really walk out of the week that was and go, I'll have to remember that on Wednesday, X happened. Really, you've got to put it, I want you to walk away, or we want you to walk away with okay, things are getting bad, or, that's a good point. I need to remember market cycles or something, right? Mm-hmm. And as you know, we've been rabbiting on a little bit about the market being expensive and I think is in a bubble, the AI stuff, right?
Yeah.
So it's just, if you have a look at the headline, the market insight from the Financial Times was, does valuation matter anymore in the age of AI? Right? Now when I saw that just encompassed everything, where I just went, yep, we're at the peak.
Well, what are you buying?
Well, but it's, as soon as people say value doesn't matter, the implication of that is, okay, well, that means price doesn't matter, right? Because if it's the same thing when people say, property only ever rises. Okay, so if it only ever rises, that means it doesn't matter what you pay for it, because in the future it'll be more.
Yeah.
Right? So it can never fall. And we
that's
know
what I've heard.
Yeah, well, that's not the case, right? So when you take that sort of second level thinking by going, okay, does valuation matter anymore in the age of AI? It's like, okay, well, what's AI got to do with the valuation of Woolworths? Right? It's just, it doesn't make any sense, and it's just people putting headlines out there that I'm sure they, everyone when the .com bubble was on, everybody had a .com tag, right?
Yeah.
Pets.com, blah, blah, blah. When the rare earths bubble was on, every mining company put out a thing going, we've got rare earths, right? Hoping to attract money and stuff, right? So what are we doing now? Everyone's talking about AI, right? So all of these companies are mentioning, we're going to use AI and i.e., we're going to be more profitable and more efficient and we're going to make more money, so you should buy our stock. right? And to do that, you have to suspend judgment on valuation, right? You have to look at it and say, oh, okay, well, if AI is going to take over the world and this thing's worth, it's $10 and it's worth $120. And it's like, okay, but that's not the way it really works.
Yeah.
But that's what they're sort of selling it as. And that you never see that stuff at the bottom.
No. It's a casino.
They
probably used AI to write that headline.
Well, yeah, that's
give me 10
yeah,
headlines.
Yeah. But it's a casino at the moment. It's not always a casino, but that's actually a good thing. What you just said, because that's the word I'm looking for. It's just like everything's become a casino. Like crypto, gold, currencies, stocks, bonds. There was something else I read today. I can't remember what it was, and I'll remember it for next week. But that's right. There was just a brief story, right? There's this thing now where what people are doing is they're selling their car by lottery. Right? So what they do is they say, listen, I got a BMW 328i, right? And I'm going to sell it, and I'm going to make it a lottery. So everyone can, if you want to buy a lottery ticket, it's $10, right? Everybody buys a lottery ticket. I'm going to draw it on, December the 1st, and the winner gets the car, right? So you look at it and say, oh, okay, well, for $100 I could get a Beamer. All right, I'm in. Right, but if there's 400 people who enter, well, he gets 40 grand for the Beamer when it's probably worth 25.
Yeah,
right. But just that thing where everything has become a gambling speculator mentality, and it's just like you say, you just think, man, this old thing's just turned into a casino. Like it's just crazy.
Yeah, mate, wild.
Well, it just has to blow up.
Been saying that. It's just a bit. Look, at the end of the day, even though it's a casino, like to think that the way we're playing the casino with a strategy, understanding when we've got the edge, when the house has the edge.
Yep.
And like you covered in the last coaching call, right? Just avoid the drawdowns as best as possible, or protect yourself.
Yes.
In the event of a drawdown.
Yep.
You want to be in a position where that's actually an opportunity.
Yeah. Absolutely.
As opposed to something that slaughters half.
Takes. Well, remember, in 2000, the NASDAQ lost 80%.
Mm-hmm.
So when you look at it now, and this is the hard part, because you look at it now and you think, oh man, what you think is, and you hear it in Australian property, right? Oh, Albo won't let property prices go down. And it's like, mate, he doesn't control the prices, right? And it's the same with the stock market, where people go, mate, I couldn't see the NASDAQ going down 80%. And it's like, well, what, do you think there's one person up there controlling all of it?
No, they'll step in, they'll print more money.
Yeah, but but again, Tom, that doesn't mean people are going to go and rush in to buy the NASDAQ, because the narrative will change, right? And that's what happens. Like they say, the government will print money. What, so we can all go and speculate in the stock market again? I don't think so. So, that's where you've got to be really cognizant of the market cycles and stuff. We're going to talk about that in the lesson of the week. But that's what I'm worried about. It just sort of, look, it's been with me for a bit, but just this week, there was just stuff where I kept looking at it going, oh man, this is, things, Oracle, Larry Ellison, who runs Oracle, has now become the richest man in the world, because this week he made $100 billion because the Oracle share price went up 38% in a day. Right now, I'm not talking about a mining speculator. I'm talking about one of the big companies.
Yeah, large cap.
Absolutely, absolutely. Now, why did that do it? Because, OpenAI, Sam Altman, said we're going to do a $300 billion contract with Oracle in the data centers and cloud computing, right, stuff. Okay, market takes off, right? Now, there's a couple of things. One is OpenAI doesn't have $300 billion. Larry Ellison's Oracle hasn't got the supply capability to fulfill the contract, right? So in other words, you're looking at something where some guy says, we're going to do X, and they haven't got any money. The other guy on the other side says, yeah, and we're going to fulfill the contract. And it's like, yeah, but you haven't got any of the stuff that he needs. It's like, oh, well, yeah.
Yeah.
We'll figure that out later on. But the share price in the meantime goes up 38%.
Yeah. Off a tweet.
And the guy makes $100 billion extra. But that's when I go, oh, boy, that's really, the US is just untethered from reality. And that's when you've got to start to be really, really worried about markets, because this shit's not going to go on forever.
But that kind of stuff's been going on for a while.
Yeah, absolutely.
And in crypto.
Absolutely.
There was a phase there where Elon was basically playing the Doge price like a puppet, just based on what he tweeted.
Yeah. But that's what I mean, Tom. The thing that concerns me is we're going to talk about the Charlie Kirk thing, right? Where that single event can be the catalyst for an enormous change, right? It's like a black swan event, right? And that's where you go, oh, I didn't see that coming. Well, no, you can't see that coming, right? You can't calculate into your, you don't do a discounted cash flow and go, okay, yeah, assassination of Charlie Kirk. Okay, yeah, what's that worth? Oh, 10%, right? You can't do that stuff. And as I've said before, it can be the social events that impact markets. It's not just necessarily market events. Like if America descends into, some fairly serious chaos, the market's not going to, you can't look at that and go, oh, yeah, that's bullish. I mean, you've got to look at that and go, oh, hello, things are getting out of, And my concern is that it will blow up across America, not just,
Civil War stuff.
Yeah, it's not a, oh, yeah, that's just a Detroit thing, right? It's confined to Detroit. Right? It's sort of like, no, this is like COVID, where it just starts spreading out, and there starts to be riots in a lot of cities. You get the right in the politics, you get the left in the politics, and then they start going at each other. And that's when, Trump's already talking about bringing in the army to Chicago and all these places. So you look at it and just go, oh, man, this has got January 6th, where they stormed Capitol Hill. It's just got that written all over it again, right? And that's what I mean. There's things where you just sort of think, oh, man, this could get really ugly. And if valuations were reasonable, you'd sort of go, okay, well, things are not too bad. But it just seems to me that everybody's just completely lost. Everybody's just completely lost it, right? It's just like speculation and fraud and, people taking advantage of everybody.
Oh, and it just blatant seems to be, hate.
Yeah, absolutely. But, yeah, really deep stuff where people are saying, oh, it was good he was shot and this sort of stuff. It's like, oh, dude, hey, let's get a grip. But
take a look in the mirror, mate.
But it's just a real level of anger where that's really hard to turn it's very hard to dial that down. Right, but particularly when you've got a president who's kind of dialing it up.
Who's an aggressor.
Yeah, who's Trump's not a guy who brings people together, right? He's a guy who separates out. And they've already said, there's all this stuff over Twitter, like, oh, they should prosecute the radical left and, blah, blah, blah. And look, that's what I mean. You look at that and go, man, these people are really on edge, right? And it could be a really big problem.
Yeah, it goes straight to an attack on the left.
Absolutely.
Instead of going, this is just some unhinged...
Well, we don't... Yeah, I mean, that's a good point. See, I thought to myself, well, hang on, who said it's a radical lefty communist? It might be someone from the right who doesn't think Charlie Kirk's right-wing enough or, there's a whole raft of reasons.
Yeah, I don't know enough about left and rights and all that stuff to really get into it.
Yep.
All I know is it's sickening.
Yeah, and the point being, these are the things that can trigger markets, right? Because it triggers, like you say, it triggers a civil war and suddenly markets are on the decline and, things take over, momentum takes over, margin debt's at a record level, so then they start getting margin calls.
Yeah.
The US property market is...
It's turning as well.
There you go.
like we've covered.
Yeah. So that's why I've written there, hidden risk and silent evidence, memories of 2000 to 2007.
But the economy's doing well.
Yeah, but
I know the stock market's not the economy.
Yes.
And I get it, right? But it's just, if more people have jobs and, we're creating more jobs and people are making more money and their house prices are going down and their portfolios are dropping and it's just.
Yeah. The problem is, Tom, the level of inequality there is enormous, right? It's enormous. And so the issue you've got there is, if you build only yachts for the rich people and you give the poor people bread and water, well, it's still going to add to GDP, but you'd look at it and go, hang on, this is not a really great way to run an economy with all the rich people getting what they want and the poor people getting basically stuff to keep them going till next week.
Yep.
And, I'm exaggerating, but there's a lot of that element to it, right? And that's why I'm saying there's hidden risk and silent evidence. And what I mean by that is if you look at the US property market, and I'll detail this in a bit more, I'll give a bit more detail over the coming weeks, but there's a lot of fraud going on, but it's been done that way for reasons that, for example, one thing was there was a program that was going to end, and it was going to make it harder for people to continue the fraud, right? Well, what happened was they then went, okay, no, we won't do that because Biden was coming into the 24 election. Right, so they sort of went, no, don't cut that off. That'll be really ugly. So it's that sort of can kicking, right?
Yep.
Well, let's kick the can down the road. But the difference is you can't see them kicking the can down the road. What you're doing is going, oh yeah, things are all right. But what under the surface, bubbling away, is this huge mountain of fraud where. If the dam wall breaks, it's like, oh my God.
What do you mean? Like big corporates?
Well, no. Okay.
Not Coles and Woolies.
Yeah.
No.
Look,
monopolies.
In short, the Fed governor, Lisa Cook, right? Trump wants to get rid of her, and he sacked her, but he's not allowed to, right? He hasn't got the authority. Okay, but he said what happened was Lisa Cook has 2 mortgages and 2 places, right? And she calls both of them her principal place of residence. You can only have one place designated as your place of residence, right? Now, what's happening is investors in the US are borrowing, getting a mortgage and saying, yeah, I'm going to move to 5 Smith Street, right? Okay, so they get a mortgage, then they don't move to Smith Street, but they put it down as their PPR. Right?
Yeah.
They get people in, then they go to the Federal Housing Association and say, oh, listen, I can't meet the mortgage payments. So what happens is they say, all right, well, look, listen, okay, we'll put you at the back of the queue, so don't sweat. We'll give you 3 months to get it together, right? Okay, so they go back in 3 months and say, listen, I still can't meet the payments. Say, all right, well, look, we'll keep you at the back of the queue. Okay, so this goes on ad infinitum, right? So what happens is after 12 or 18 months, you haven't paid a cent, right? And then what you do is you flip it and take the money, right? So this is what, the evidence shows that
there's a lot of that.
There's a heap of it, and it's investors who are doing it, right? There was a paper written by the Philadelphia Federal Reserve in 2019, and they said, guys, this shit's still going on, right? They're still rotting the market. So that's the sort of stuff I'm talking about. That's the stuff where you go, well, hang on, we didn't know all this fraud was going on. And it's like, yeah, I know, because, that's the whole point.
Yeah, we didn't know we could do it.
That's exactly right. So I'm also looking at, and as the lady said, and as the Philly Fed report said, it's all investors. It's investors who are doing it, right? And the other thing I've had a look at, and I'm not that worried at the moment, but the thing that was a real problem in the US was residential mortgage-backed securities,
yep.
right? Australia has exploded in mortgage-backed securities, right? So we'll talk a bit more about that. But essentially, I'm starting to look at stuff going, oh, man, there just looks – this is why I say, I'm concerned because it just seems to be there's so much bloody fraud and rorting, people rorting the NDIS, right? Like they're all taking the mickey out of that.
Oh, yeah.
You can't tell me that all these bloody mortgages are being written to people that have got a capacity to pay, right? There's, that's what I mean. I just keep looking at it and going, oh, man, it just seems like everybody's gone nuts, and part of it is wealthy people do stuff, and I'm talking about the 1%, they do stuff and don't care about the law, right? So that's why people at the bottom end go, oh, well, if they're getting away with it, I'll get away with it. It's just a different scale, right? They go in and, they rob the local Bunnings and all this sort of stuff, right? Because for them, it's like, oh, well, if Elon Musk can, rip off billions, I can go to Bunnings and get what I want. And it's just becoming a real concern. And I just think, this sort of stuff can't go on forever, and it usually blows up. And events like the Charlie Kirk assassination may be the catalyst where all hell breaks loose.
Yeah.
Yeah, that's the good news.
Wow. Interesting. Well, I think it was last week we were talking about wonder what the black swan will be.
Yeah.
We'll just have to wait and see.
Yeah, absolutely. Look, it could be or it couldn't be, but it just seems to me to be, these grains of sand are piling up, right? And there's, it's going to hit an ugly ending. The big question is when.
All right. I will scale back my US
Be
investment.
Prudent. Be prudent, my friend.
So speaking of the Oz economy,
yes,
banks behaving badly, ANZ looking to cut 3,500 positions.
Yep.
Still modestly overvalued with the Cape at 21.
Yeah.
What are your thoughts on that?
I think, well, the ANZ came out on Thursday, I think, or Wednesday, and said we're going to get rid of 3,500. A couple of other banks followed. I think Bendigo and Adelaide also said, okay, well, we're going to chop some too. I think the question is it a bellwether, right? So in other words, are they doing it because the economy is not improving and therefore things are getting worse, so we need to think about that? And that ties in with the second one you mentioned there with, Australia's Cape's at about 21. So it's overvalued. It's not crazy, right? But it's overvalued. And Phil King, this guy who runs these funds, came out and said, well, it's because of superannuation. But more to the point, he said, he's a bit concerned about it, right? I.e. the ASX is overvalued and you've got to be careful. And I think we were talking about it last week where, the valuations of some of those big companies are getting pretty high.
They're getting up there, but when you compare it to the US, we still look cheap.
Yeah. But that's the thing though. You've got to, there's two kinds of valuations. There's relative valuation and historical, right? And so at the moment, you hear a lot of what you said there, which is, like, oh yeah, we're expensive relative to the US, we're cheap. And it's like, yeah, I know, but historically we're expensive. So that's where it can be a bit of a, you can run into a clash. And that's where it becomes trouble because if it was the other way around, if Australia was crazy expensive and the US wasn't, that wouldn't be that much of a problem for a global portfolio, right? But when the US is expensive, as we've talked about, when it sneezes, everyone catches a cold. And if you're expensive as well, then you're going to get a bit of a belting. So, it's just got a sort of whiff of the GFC about it.
Yep.
Or the .com, take your pick. I mean, the coaching call we talked about, 29, the Great Depression, 72 to 73 recession, 2000, the .com and the GFC. And if you have a look at all those events, the market went down 50%, right? Well, you have to say to yourself, okay, well, why is this time different, right?
Yeah.
And that leads to my third article.
Fair enough. Well, I know for a fact I'm rebalancing more than I was.
Yeah.
More regularly than I was.
Yeah. I think there's an article. There's an article there where there's this guy called Victor Chevets. I hope they got his name right. He wrote a really good book, and I read it, and I sort of agreed with most of it. I sort of thought, oh yeah, okay, this is what I'm kind of thinking, right? And anyway, he did a talk, and it was quite sort of very downbeat. But also the thing that caught my eye was he said, oh well, there's not going to be any mean reversion, right, in stocks and stuff. There's no more economic cycles or no more capital cycles. You hear that every single time, right? Every single time someone comes out and says, we've defeated the business cycle, right? And inevitably the market crashes.
Yeah.
Right. And so I just thought it was interesting, again, with this theme of, which again is common, right? When the market continues to go up, when the market continues to defeat every sort of thing that we throw at it, people get lazy and say, oh, it's different.
Yeah.
Right.
100%. Like, I can tell you now, in 2019, at the end of 2019, early 2020, when we had that COVID crash, and it dropped, I can't remember what the percent was, 30 odd.
Yeah, 30 in a month.
I was like, okay, that's a bear market. Like it's past that threshold of 20%, all right, and then bang, like V-shaped recovery.
Yeah.
And
it bounced 30% the next month, I think.
And we've seen that a couple of times.
Yes,
and it's just, that's, for me more than anything, that's the thing that makes me feel like it's all batshit crazy.
Yes, yeah.
Like,
well, it does make it hard, right? But even in COVID, the 30% decline, the US Cape was 33, right, and it dropped to 23.
That was still,
which is still expensive, right? But they resurrected it again. The same thing happened in 2000, right? The Cape was 44, it fell to 23. Now you've got to remember that's 50%.
Yeah.
But then in 2003 at 23, it took off again and doubled to 2007, right? So it went up 100% in 4 years, and then it crashed 50 again. So that's why I put in the lesson of the week, because what Victor is saying is, I don't think Victor's saying it's all going to be great, but what he's saying is, look, all of that stuff before, that doesn't count anymore. And I've heard this way too many times, right? And the reason why I put those charts in there was to show people that if you go back and read every bull market around the top, everything is the same, right? It's undefeated. This time it's different. We've got new technology. The global system's changed. The markets have changed. We are a lot more efficient now, and then it crashes. Right? It's the same thing every time. It's like, it's just overvalued.
Yeah.
Right? So that's why I put those charts in there, the regression to trend, which, we're a long way above. And then the other one, the secular highs and lows, right? That
In the lesson of the week.
Yeah. And the bottom one there, that, secular high and low. What I'm trying to show people is that it doesn't go on forever, right? And so that's why you've got to, as painful as it is sitting in a lot of cash, it's a lot. You're gonna thank Warren Buffett when it crashes, right? Because then you'll be able to go, okay, now it's really cheap and I can get some value.
Yeah,
right?
And then you get you get to compound your money at a ridiculous rate.
What's that? Yeah, well, yeah. And that's what you want, right?
Yeah.
Even if Victor said, things are going nowhere for 10 years. And it's like, okay, but I bought something that had, compounds at 10% because I bought it cheaply. That's what you want, right? That's what Buffett does. Buffett looks at it and says, if this thing didn't grow anymore, what would it, if it just grew with inflation at 3%, what would it return? And if the dividend's 7 and capital growth is 3, Buffett goes, okay, well, that's 10. And, it'll probably end up being 11 or 12, right? But just to give you an idea, just to finish on this quickly, and again, I'll expand out on this point in future podcasts, but in 1999, Buffett gave a speech, right, and wrote an article. And he said, this is in 1999, right? Now, the Cape was about, 43 or something, right? So Buffett said, look, the next 17 years will be not like the last 17, right? Now, the last 17 was 1982 when the Cape was 5, right? The market took off. You made 16% per year compound, right? Double every 3.5 years. Okay, we get to 99. Everyone's doing the same thing. The old man's missed the boat. It's all about the .com, right? He goes and says to him, you're all full of shit. Here's the real story. So Buffett says, look, over the next 17 years, working out on a couple of indicators, one being interest rates. What was the other? He talked about interest rates and there was one other. It'll come to me. Anyway, he said, look, if you use these two indicators, he said, generally, I think over the next 17 years, you shouldn't expect anything more than about 6. And with inflation, probably 3.5, right? So I went back and went, okay, I'm going to do the math. So I went and checked. He's spot on, right? He's spot on. Between 2000, but you've got to remember, Tom, in 1999, people were saying we expect 15% compounding per year. Right, and it's like, dude, that's not.
Nah, yeah,
that just ain't going to happen.
In
brother.
this day and age, you want to be able to buy a Bitcoin and make 300% in 6 months. And,
yep.
And
that's another one.
Get
right?
the Lambo. And all that ridiculous. All
stuff. Of the financial independents retire early, right? What's that about? That's about speculation, right? That's about saying to people, listen, hit crypto, you'll be rich in 12 months. Buy my strategy, right? Property stuff, right? Oh, what you got to do is you got to buy property, passive income, retire early. I mean, if you want to make 100,000 from property, clear, net, you need about, you need $10 million worth of property. Well, okay, best of luck getting $10 million clear of property, right? Without any debt. I mean, it's just, it's just bullshit. It's ridiculous. But these people will find out the hard way. Right, so that's why I say, when you do the numbers and you ignore that stuff of like, oh, it's going to grow at 80% for 10 years. It's like, okay, it'll be bigger than the world GDP. That's where you say, well, hang on, how likely is this? Right, and that's like Sam Altman.
Yeah.
Like, oh, we're gonna spend $300 billion with Oracle. It's like, Sam, you make $10 billion in revenue. Where the hell are you getting the other 290? It's just crazy. Anyway.
Yep. Absolute madness. Well, I think that's a wrap. Thank you for listening. If you're not subscribed already, please check the website out. Subscribe to The Week That Was. You'll find the latest versions anyway. We'll have links to the articles that we reference, pictures of the charts, a lot of the things that we spoke to in the podcast. Thank you so much to everyone who's taken the time to rate us on Spotify and comment. Helps a lot.
Yep. And Leo, Broncos are going to knock you off.
Thanks,
Cheers,
guys.
folks.
This podcast does not provide financial advice.